Enron, stock price manipulation, and organized piracy. Enron was sacrificed. The people who ran it used it for their own private gain and then sacrificed it. That might not even be totally true, but to the best of my knowledge, it has been openly admitted that Enron was engaged in manipulating the prices of high leverage investments simply to redistribute wealth towards particular recipients of wealth. They bought certain investments, then they took certain actions to increase the values of those investments. In that regard, the behavior of the leaders of Enron is not at all unusual. They were just trying to make their own investments be profitable, like the owners of most any business. It was their specific methods, their specific behavior that were distinctive. That was distinctive. It wasn't the general pattern. Of course, they were trying to make their investments be more profitable. That's called business. They owned a business. They wanted to make, or they owned more than one business. Let's say they owned some private trading accounts plus their shares of Enron, and they use their control of Enron to do good things for their private accounts. So, what's the basics, though? Enron, how did they do it? Let's put it that way. How did they manipulate the value of their private investments through Enron? Well, again, I don't know if this is absolutely true, but consider this a possibility. Enron was involved in the electrical power business in California. For those who want to have more detail about the specifics of the Enron, reality, you can search online for it. There's lots on it. This is not about that. All of this I'm talking about in regard to Enron is a setup for a more general commentary on stock price manipulation, organized piracy, and specifically what is about to happen, to the best of my knowledge, in the U.S. stock market as a whole and beyond the U.S., but we're focused on the U.S. in this piece. So, Enron was involved in the electrical power business in California. This has to do with how the leaders of Enron could have enriched themselves personally and privately through the use of the sacrificial instrument of Enron, which they then disposed of, and they're done with it. So Enron was involved in the electrical power business. Enron had the authority to turn off its own electrical plant operations in a sudden sequence that would create huge shifts in the supply of electricity to the region, specifically huge decreases in the supply of electricity. By suddenly reducing the supply of electricity during a time of steadily high demand, Enron could start price spikes in electricity that could then escalate into huge speculative frenzies. Because they could trade those predictable prices and those price rises, because they could trade those predictable price rises for great profit through investments like leveraged futures and call options, they may have intentionally created those price spikes by cutting off supplies of electricity from their own power generating stations. In fact, there's a lot of evidence of that, like live recorded phone calls and so forth. I've done a little more research on these matters that I'm going to make specific reference to, like with citations of movies and all the different documentaries and stuff. But anyway, the price spikes were predictable to the people behind the price spikes because those people knew that they were about to reduce production at a bunch of their plants all at once, even if they blamed those reductions and the productivity of their plants on technical problems or any other factor, the government, whatever. Even if Enron was eventually bankrupted, if the leaders behind Enron made huge private profits by manipulating prices using their instrument, Enron, their instrument served its purpose and perhaps then was discarded, rather like a piece of used toilet paper. With Enron's filing for bankruptcy, they were done with it. It had served its purpose. Now, it doesn't matter really to me if anything I just said is specifically true. Again, all of the evidence against Enron, all the court cases, all the documentaries, if they're false, I don't care. It could be that Enron was not influencing the supply of electricity, but was more involved in influencing the supply of oil, or of toothpaste, or of silver, like the Hunt brothers in the late 1970s, allegedly. Controlling supply is the best way to control price. That's what I'm talking about now in regard to stock price manipulation, stock market manipulation, or really any market manipulation, even the manipulation of perception. Well, let's not go there yet. The manipulation of price is most easily done by controlling supply. So if somebody has kind of a monopoly on the supply of a certain thing, and then they themselves cut off the supply of that, then they can really drive up the prices of that. And that's the whole idea behind the antitrust laws and everything, is that if you have several people who all agree to reduce supply of something, they can drive up prices or something like that. Anyway, I could care less. This is a quote. I could care less what puppet sits on the throne of this empire. The one who controls the money supply controls the empire, and I control the money supply. That was said by Meyer von Rothschild, I think. Maybe, I'm not even sure of his name, but it was one of the Rothschilds, paraphrased from what he apparently said back in the late 1700s about the British Empire, and the what king or puppet or whatever sits on the throne of the British Empire. So there are two primary ways of influencing price, as Mr. Rothschild referenced: influencing supply of something, or the other way, influencing demand for something. Demand involves PR, public relations, and marketing, and legal subsidies and things like that, like to have the government pay for thousands of people to get health insurance for a particular type of healthcare procedure that might be quite detrimental to them, but it's quite profitable, especially if the taxpayers pay for it. They run up the prices. Right? So that's influencing demand. Now, supply can simply be cut off. Again, in the case of monopoly, that could be cut off. If you just turn all your power plants off, you're the private supplier of power, you turn them off. Even just briefly, prices will spike up. Or if you turn a series of them off in a sequence, it can cause power outages. It can result in things like Jerry Brown being blamed and being kicked out of government. That was the governor of California at the time, and he was blamed and kicked out, and it probably had nothing to do with him, other than maybe some people targeted him as a scapegoat. Obviously, maybe he did something or said something they didn't like, and so they used their influence to kick him out. But anyway, or to blame him and all that. They created a scandal and a crisis and then blamed him. Anyway, the media blamed him. Media is very powerful in a fascist, dictatorship, communist type of society like ours. Uh-oh. Did you get that? In a society where media has a great deal of influence, then the media can demonize a particular politician or corporation or whatever, and people believe it because the media, can find some evidence, create some evidence to damn or condemn some group and push through some program through setting up the public with propaganda. So supply can simply be cut off, like shutting down some plants. Maybe you have to do some safety precautions. Maybe there's a technical problem. Maybe you just pick up a phone and call somebody and say, hey, shut down. Or supply can be suddenly increased, like when Walmart floods a market to drive a competitor out of business by selling something for less than what a competitor can sell it. Even if that low price of that something means that Walmart is selling it at a loss. How is that good for Walmart? Because then once Walmart drives their competitor out of business, then Walmart takes over the competitor by a buyout, or simply runs them out of business and then takes over that market share once the competitor is weakened by Walmart dropping prices on them like that. So most of the antitrust issues turns around Standard Oil and other cases where there was concern for driving prices up, which obviously is something that is of interest to most any business owner. If you sell a pair of shoes that you can produce for $3 and sell for $120, that's not as good as if you can sell them for $121. So economics is war. War is economics. Many people do not understand the issues and risks involved in things like the real estate mortgage industry or the insurance industry. They'll be milked. Those people will be milked. They have been drawn in through advertisements and PR and hype shows and commission earning salespeople. aka realtors, etc., who actually know very little about the core purposes of the industries in which they may be employees, just like the average person working for Enron had no idea how much money the leadership of Enron was privately collecting through the mechanism of Enron and its manipulation of energy markets. So even when leaders simply embezzle money from a corporation, they are obviously doing that as a sacrifice of the corporation's financial stability. Clearly, corporate leaders sometimes, whether it's an employee or an owner or whatever, sometimes they sacrifice a corporation. Just as sometimes they might sacrifice profits, to drive a competitor out of business by, in the case of Walmart, by selling, oil changes for $8. Well, if they do that for 3 months, of course they lose some money, but they've got deep pockets. They can do that for 3 months. They'll drive their competitors out of business. Then they'll drive their prices up to $30 per oil change or whatever. But the competitors are all gone, and they have to, new competitors can show up once Walmart brings its prices back up, but they've got to start over. That Walmart has taken over a market share by doing $8 oil changes or whatever. So most people don't get how the setup is going on, and that corporate leaders would sacrifice corporations. So the masses are duped into pouring their investments, concentrating them into real estate or into the U.S. stock market, in particular certain stocks like the Dow Jones Industrial 30 or other large companies, or the high-tech sector gets hyped up, right? And then the masses are milked through the mechanisms of markets and legal systems and so on. The first stage is the PR or propaganda stage, with propaganda about a particular legal system being central to the entire scam. Not about a particular company or industry or even markets in general, but about a legal system. So you propagandize people about a particular legal system being the most just and the most one that protects the public the most, things like that, and the best in the world on it. And then the concentrating of control of supply of a particular thing, whether that's electricity or silver or whatever, then cutting off supply, like supply of oil or supply of credit and mortgage financing. That means you can control prices of real estate. And if you can be the creditor in a real estate market, like you're the Federal Reserve Central Bank, and you got everybody borrowing from you, and then you drive prices down, guess what that means? You own it all. Their equity will disappear. They'll be forced into foreclosure. You will own all the real estate. Can you sacrifice the central bank and the Federal Reserve if you choose to? Probably. Anyway, if the conspirators can convince people that the conspirators are trying to rescue the masses from some other conspirators, that is perfect. Just blame the foreigners or blame the central banks. Because again, if the central banks are being sacrificed, they do their thing, they're being sacrificed, then some private owners that are, not out in the open, not being targeted personally, they can, they can make private profits, and the central banking system can collapse. They still make their private profits. That's the point. So perhaps there are no conspiracies, and the leaders of Enron are just as innocent and ignorant as all the other masses. I doubt it, but again, that does not really matter to me at all. Maybe Mr. Rothschild was completely innocent and ignorant as well. I doubt it. The point is that people may vastly underestimate the potential for a supply chain to collapse. It could be because of a technical oversight. It could be because the CEO at Enron called a few plant operators and gave a mysterious order to halt production, perhaps for an unexpected safety test, right, that happened to be initiated at 50% of their electrical plants within 60 seconds of each other. He made, a series of phone calls, bam, 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 bam. Or nowadays with text messages, you text them all at once and then follow up with a phone call. Did you get my text? Did you turn it off? There's a safety test. It's an issue. Whatever. People do it in the urgency. They believe it. You manipulate the prices of energy. You get Jerry Brown knocked out of office, all that. It could be because a central banker like Rothschild manipulated public perception and public behavior for personal gain, kind of like an owner of a business might manipulate or influence or organize the activities of their employees, or a government might influence the constituents within the jurisdiction of that government, or advertisers influence and manipulate and organize the behavior of their viewing audience and listening audiences. So everyone knows that prices can come down faster than they can go up. The day that Enron announced that they were filing bankruptcy, how many years of rising prices vanished overnight, or within a few months, whatever. I mention all this again with no particular interest in Enron. I just know that some people are hysterical about stock price manipulation and other forms of corruption, corporate corruption, and so on. I ask, why be hysterical? Be realistic. Stock markets are systems for the organized redistribution of affluence from certain parties, the masses, to certain other parties. Be attentive. Be attentive. Be adaptive. Why not? Stock markets in the U.S. and beyond may be about to plunge. Why do I say that? Well, I've been publishing that warning for many years, long before the 2007 peak in U.S. stocks. But why do I repeat it now? Because the U.S. stock market has formed a series of what I call shelves. These shelves also are visible on several scales of time. We'll show them. Consider the image below and the most notable features of the visual pattern in that image. I made that image very small so that the very little detail would stand out, only the most obvious things. I consider it obvious that there is a big sudden drop, about 1/5 or 1/4 of the way from the far left, then a shelf after that. By shelf, I mean that prices kept coming down to a certain range, like a magnet was attracting them, or like a ball bouncing after being dropped by gravity and then coming to stillness, kind of, whatever, close enough. Let's look now at the same image, but larger. That is the last 2 days of prices in the U.S. SPX or S&P 500 Broad Stock Market Index. That was Thursday, the 17th of November, and Friday, the 18th of November, 2011. Now, late Thursday, prices formed a shelf in the second half of Thursday at about 12.10, with 12.15 or so being the upper range of prices. Friday, prices moved very little, mostly forming a shelf a little higher, over 12.15, with a brief dip around midday to test the level around 12.10. It stayed over 12.10, but you can see it came down, tested that level, came back up, and stayed above 12.15, even if just barely, for most of the rest of the day. Now, there was a shelf or support level at 12.10 on Thursday, and a bit higher the next day, closer to 12.15. Now let's look at the SPX chart for a longer period of time, the last 6 months. Again, there's a small one. Again, we see a big drop, about 1/3 of the way from the left, then a shelf, and then a slightly higher shelf over to the right. Here is that same chart, bigger. In the middle 2 months shown, most of August and all of September, prices mostly stayed between 1,100 and 1,200. In the last several weeks, since mid-October, prices formed a shelf around the 1,200 level. And as we were just talking about, 12.10, 12.15, but just over 1,200. And in October, it was a little closer to 1,200, that there was some bouncing around, even just under 1,200, but basically right around 1,200. So let's look at an even larger period of time now, 4 years. There's a steep drop on the left. That was in 2008 in particular. Then in the middle of the chart, there is a shelf above the 1,000 level. It's not as clear in this one, but if you look over to the right and see where the 1,000 level is, you'll see that the latter half of 2009 and most of 2010, there was prices stayed between 1,000 and 1,200, but really down close to 1,000 quite a bit of the time. They kept coming down and testing that, and it kept holding. So it's calling it a shelf. And then over to the right, there's another shelf around 1,100 in a few months of time over there, and that is actually the same shelf that I showed in that 6 month, the chart of the last 6 months, closer up chart shown above. So what does all this mean? Does it mean that prices for the US SPX must do anything particular next? Does it mean that stock prices are inherently steady and that economic trends are inherently permanent? Or does it mean that it is a good time to own cash rather than stocks? or perhaps even better than cash, to own put options and positions in inverse ETFs. This is a good time to be attentive, like any other time. This is just an especially good time to be attentive to the potential for predictable and sudden drops. For predictable and sudden drops in prices which produce huge transfers or redistributions of affluence to a certain few participants relative to the vast majority of participants. Why not be one of the receivers of the transfer? Why not be one of the attentive, adaptive, the receivers of the redistribution?